Hello, my name is Eddie Tofbik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here is your weekly technical analysis of LME 3-month lead and tin. LME 3-month lead. We have a possible choice of pattern here, or maybe even both patterns acting at the same time. Anyway, the first pattern is a possible mid-November 2022 to date head and shoulders top. The pattern is a little extended right now, but has not as yet seen a significant break below the neckline. That's the reason why it's extended, and it's currently at 2024, which is highlighted actually in green on my daily chart. The second pattern is a derivation, and actually an extension from this head and shoulders top. It utilizes neckline as the lower trend line plus an optimized upper trend line, note the optimization word, currently at 2137 and highlighted in bright red to together make a possible descending wedge pattern. Right away, the optimization I've undertaken makes me suspicious about the veracity of this possible pattern, but I'd rather say it and only look a fool now than have it confirmed later on. The failure of the head and shoulders top to push lower, specifically down through the green neckline, and thus the extension of the market into a possible descending wedge pattern, is a direct result of the failure to move lower. That's the direct result of that failure to move lower. Supporting the market ahead of the neckline is the now flatlining long moving average, currently at 2063, as well as a seemingly significant January 2020 high at 2039. The overhead resistance of the descending optimized red downtrend is helped, though not by much, by the flatlining medium moving average, currently at 2123. Also the interesting 50% Fibonacci line of the March 2020 to March 2022 move at 2135. The declining short medium moving average, currently 2154. And I suppose by the lower trend line extension of the May to June 2021 descending triangle, though I have my doubts about this one. So if all these supports and resistances and the patterns still not fulfilled, I am as a consequence not able to provide targets either above or below, as the patterns are still in construction. However, I can give some idea of the size of the moves potentially possible. Thus, for the head and shoulders top, we would have a possible primary move lower of about $121 under a confirmed break below the green neckline, and a harder to reach secondary move of about $238 under a confirmed break of the neckline. For the descending wedge pattern, things are a little bit more complex, with potential for both a break above and below. Thus, for a confirmed break above the red downtrend, we would have a potential primary move higher of about $149, with a harder to reach secondary move of about $240, whilst a confirmed break below the neckline, that is acting as the lower trend line of this proposed pattern, would see a primary move of about $70, with a secondary harder to reach move of about $240. Finally, overshadowing all of this is and was January's monthly key reversal down. LME 3-month tin. The move up from the turn of October into November last year rose into a series of stratified resistance levels that slowed but did not halt the market's rise. The major ones were, and still are, but as supports now, at the following levels: between 23,000 and 24,155, at 21,360, and between 20,435 to 20,510. Since Christmas last year, the market has broken higher, through the 2013 high at 25,250, the 2012 high at 25,875, the lesser Fibonacci line at 27,330, the July 2011 high at 29,010, the lesser Fibonacci line at 30,205, and finally, the interesting 50% Fibonacci line of the March 2020 to March 22 move at 31,845. I said some weeks ago that this ultimate level would be the real test of any rally, and so it proved to be, as prices did not break up over this 50% Fibonacci line, but just breached it with one single close over before heading back down, gapping lower indeed. I'll now reprise what I call my big thought, a part of my commentary from 6 weeks ago that I think is still relevant, and a thought that is also still valid, even if prices drop down to the lows of October last year, or else move up and bounce further higher over the current year's high. So I quote, "Then there is the big fall. I'd like you to ponder again, if you will, and an even bigger thought I'd like to share. 9 weeks ago," so this is obviously now 15 weeks ago, 9 weeks ago I said, and I quote, "The action since late August has caused me to think that perhaps the action is a possible descending scallop pattern. I'd like to see more on this to be sure, but right now it looks like a lot like that to me. I'm minded therefore to just give a provisional idea on the upside for a pattern, assuming of course it does not peak and revert back down, which would also be in line with this pattern. I'm not ready as yet to start naming targets for this pattern, but it is worthwhile being prepared just in case." End of that quote. I'm still quoting. "This was the big thought I indicated back then. This is the big thought I indicated, and I'm pleased to say we have seen the market reach all the relevant targets, what I am renaming the small descending scallop pattern. Now comes the new bit. What if, and this is a big if, what if the action since March last year is part of a really big descending scallop pattern? In this pattern we have seen the move lower, and now we're on the upslope of the ski slope, or inverted J pattern. Thus, if the rise does halt, and it may not be that soon, then perhaps, just perhaps, we can start measuring for a further big move lower or higher." And that's the end of the complete quote. Now, the problem of being on the cusp of a market is recognizing it's only a cusp in hindsight. However, I'm minded to think carefully about all the action you can see on the daily chart, and that while we may not yet be on the cusp of such a pattern as I've detailed, we still seem to be working towards such a cusp. So watch carefully.
Thank you for listening. This weekly broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and the back of this broadcast. Copyright is Eddie Toftpick and ADM Investor Services International Limited. And here comes the final important bit.